Hi guys, welcome to the Savvy Money Show with me, your host Sean. We're going to be talking about forgotten stocks while everyone's banging on about Palantir and Tattoo Chef, which I am also. We're talking about the stocks that people were banging on about last year but seem to have forgotten, or banging on beginning of the year seem to have forgotten. Now, these are ones that can come good again. I hope you make it to the end because that's the best one of the bunch in my opinion. I want to thank everyone who made it through to the end of my 20-minute video the other day. I know it was grueling. I don't usually do them that long, but there was some important stuff in there. Now we're going to start with Fastly. It dropped 30% after earnings, and it is a third of what it was on its highs. I'm going to go through it. You can see here its current assets outweigh its total liabilities, and which is always good to know. So why is it dipping? Well, we can see that when we looked at the earnings, it expects revenue next quarter of 84 to 87 million compared to 90 million from analyst projections. Seen an increase in operating expenses with a gap operating loss of 50 million for Q1 compared to 12 million a year ago. Reported non-GAAP operating loss of 13 million compared to 6 million a year ago. This is the important bit. CFO, not that the others isn't important, that would have caused it to go down, but with this as well, CFO is stepping down after 5 years, and it has a lot of people worried until someone new is appointed. But the good thing is he is staying around and will help with a transition period. Not a lot of CFOs do that. Now, good bits. Fastly increased its fiscal year 2021 guidance by 5 million on both the top and bottom ends. So now it's going to be from 375 million to 385 million. This quarter was the largest net add in total customers. It's added 123, and enterprise customers 12 for Fastly compared to the past 5 quarters. Now, enterprise customers make up nearly 90% of the past 12 months revenue, so that is good news going forward. It means we're going to have we've had a bad quarter, we're going to have a bad next quarter, but then end of year we should do well. So Fastly is sitting at nearly 10 times forward price to sales ratio at current prices. Now, what's my take on this? My take on this is that it's a software company that was highly in demand. It's one that is still in demand, and it is growing. But instead of growing double digits like it was last year, it's down to single digit growth. Companies cannot grow double digits forever. But if you look at the price, you're getting it before Wall Street realized it. You're getting it at May prices last year, with all the growth factored in. You're getting a company in good financial state. You're getting a company that is still attracting customers. So I think it's not a bad place to park some money if you can leave it there long term. If you can leave it there for a year or two. If you were in at $120 a share, then it's not bad to average down. If you aren't in it at all, like me, I sold out 120. I didn't get the top, but I sold out 120. But then it's not a bad price to re-enter or to enter. Me, I will be leaving it a couple of days, see if it falls any further, or see if it starts uptrending. If I see it uptrending, I might jump on it, but for some reason it doesn't seem to be talked about so much, and I think it deserves to be. Don't forget to hit that lovely like button, and don't forget the sexy subscribe button. A lot sexier than me, just ask the wife. And if you want to be a hero, hit the bell notification. You'll be notified when a new video gets uploaded. And why not check out the links in the description below. If you're looking for a free trading platform, you get a free share worth up to £200 dollars, depending on the platform you use, if you deposit a small amount. Workhorse Group. Now, and this is insane in my opinion, this is a company that has $750 million in orders. They're bringing on new customers every day. They've got customers like IKEA. Now IKEA has ordered from them, and they're not even classed as on their order book yet. They'll probably announce it because they've probably got a non-disclosure act. They will probably disclose it in the next quarter earnings, or next one after that. The thing is, P ratio of 14, market cap of 1.22 billion when the order book is $750 million. Now, the UPS deal has really done them in, because there's been drone stocks that have done better than this, just because they're drone. This is also the leader in final mile delivery, EV trucks, vans, and also has software as a service. Now you put that together, and this should have flown last year. And Zacks reckons that they might have favourable earnings, and that could see it go. Now it's saying to hold, but then I was lucky, sold half my position at 40, and then after the UPS deal was announced, I sold out of a lot of mine, and when it came down to about 880. Well, it came down to below that, but I got in at 880, and because I think they're still talking about overturning the UPS deal. Not Workhorse, but people in power. Whether they do or don't is another thing. But I think without the UPS deal, this is worth it on its own. And if it does get overturned, that will fly. Even if it doesn't, it can fly on a number of things. APXT. Now this is a company, this is a SPAC, yes, that is, it was the bee's knees. When you look at it, everyone was saying you've got to get in on it. It was at $17, and you were a fool if you didn't get in. 15 cents above the bottom, what they call the bottom for a SPAC. Now, I'm not suggesting you buy them, but I did buy 180 shares. FRX. Now, I bought this at $9.96. I've done numerous videos on it, on Beachbody and Mix. People think they're not doing anything. They're not capitalising on Peloton and the deaths with their treadmills and the recall. But look at this, 59% off. They're trying to nick Peloton's customers, $8.25 a month. Now, before the Peloton treadmill issue, they had 2/3 of the subscriber base of Peloton. And as well as that, they had the protein shakes, they had the nutrition side, they also had the bikes, and in mixed fitness. I think they're gearing up to do a marketing campaign to take a lot of the Peloton subscribers. Why? A lot of the Peloton subscribers saw it as an investment. How much I'm paying to go to the gym. During lockdown I can't go to the gym, so I will pay less or the same and I'll be able to do it at home. Peloton gave them a way to return the bike and not lose any of their investment, because they would have had to use it for years to get a return on that investment. And now they get their money back. They can go to someone like Beachbody. If they don't go to someone like, and with Beachbody you don't need the bike, you don't need the treadmill. There's classes you can do without it. Or you can wait for the gyms to open. It's your decision, but I still think it's an amazing one. Spring Valley. Now this is a risk-free one. I've spoken about it often. It's under $10, so you can demand your money back. And as I said, Gates and Bezos picking up thousands of acres of land, farmland, and they are recently decided to put their own branding on the products. And what happened recently, they've branched out into more things that they do. Blueberry and caneberry production. And now there was a blueberry shortage a few months ago, so they had everywhere in the UK had to get their blueberries and fruit from Chile. And fruit from Chile, no offense to Chile, a lovely country, but the fruit doesn't taste, it's tasteless for some reason. One thing people don't realise about this is if you have non-GMO crops and the wind goes the wrong way and your land's next to Gates Farm who uses GM crops, the seeds can blow into your farm and he can take ownership of your crop. It's happened in the past. With SV, Spring Valley or Arrow Farms, you don't have that issue. You're protected. VC, this is the one under $10, $9.90. But don't worry, because this is the one I broke about the Apple car. Now, Apple have announced a deal with Magma, and people are going in the wrong direction and calling me, in my opinion. Now, they do the skateboard. That way they don't have to worry about all the aesthetics that go with it, which is smart. And I've done videos on this before. You have a guy riding on top of the skateboard with a PS2 controller, which in my opinion could become a sport on its own. He's standing up riding along there. Now, the value, they already have pre-orders, not Nikola type pre-orders where they have to pay to pre-order them, that are bigger than their market cap. And what have they done? They've signed a deal with Magna. And I think the Apple car will have the skateboard, and they will use Lucid to enable use Lucid to have the brand name. I also mentioned this RE and AAM. Now AAM is the biggest provider of the guts of a car to all the car manufacturers. Ford uses them. So many Goliath car manufacturers uses AAM. And I did a video how Ford have invested in a solid state battery company called Solid Power and with BMW. I wouldn't be surprised if the new EV Ford going forward uses a RE skateboard. And we can get hold of it for $9.90. And a little tidbit, just a bonus, Cushman and Wakefield, great earnings. They received awards, they always do. I can see that going up. But as well as that, don't forget Enable. They are still to be taken over. Their takeover has been agreed, and it is a company that has its dividend on the 11th of May, and I flagged this up when it was 2.97 billion market cap. It's now 3.66 billion. They're being bought out for 7.1 billion by Energy Transfer. Now, that goes to tell you this will end up going to $15, and Energy Transfer is also going up. Why? Because they get the money that Enable have on hand. Look at that. They were $7 Energy Transfer when I picked them up and I flagged it up. Their ex-dividend 9th of May, and they get the money that Enable have on hand, and it's going to boost their balance sheet. And Enable are just at such a good discount. Now, when I flagged them up, you can see now they were at 0.4 price to book when I flagged them up, 0.54 still. They are price to sales 1.31. You know, forward PE of 13. How could you not want to get into it? Anyway, that's all for now. Don't forget to hit like, comment and subscribe. I'll see you in the next video. By the way, I'm thinking of setting up a second channel called the Savvy Social channel. I'm still working on it, about all the social wrongdoings from companies and other people of power. As I said, there's a lot of things where companies do wrongdoings, like Cola has in the past, and all these other companies that are not flagged up. Not that I'm going to bring them into the light, but I'm going to try and shine a tiny light into them so that you can see what they're doing and see whether or not you want to invest in them. That way you can see if it's a company you want to invest in. And there's people who don't care. That's why I don't want to keep flagging on about it in Savvy Money Show, and why I'm making a second channel about it. I'll see you later.